All right, everyone, welcome back for another market review. Today is November 2nd, 2020. S&P 500 having a nice little bounce today, up about 1% or so. And we're up a little bit in the after hours as well. Um, Overall, kind of just a bit of a pause day, really. Market getting a little bit of relief going into the election, but nothing super crazy. We gapped up here, got to the 200, which coincided with this little bit of resistance from Thursday, sold off, got back below this critical 328 level, and ultimately we were able to get back above that and close, really near where we opened today, but close on a high note. But by no means is this a crazy rally. This isn't a rip your face off move, but it's a nice little bounce going into the election. So there is a little bit of conflicting data that I want to go over here. It is going to be a volatile week. There's going to be a lot of conflicting data, so this shouldn't be a surprise. Um, the election is one of those things. It's not something that hedge funds can go out there, get their inside info. They can, manipulate the market. They can, do these things. No one knows how the election is going to turn out. So it's, there's going to be volatility. And the way it's looking, there is going to be a contested election, regardless of who wins. So the markets probably are not going to like that unless there is a clear winner. Um, and so a clear winner will provide a little bit of relief for the market. So the conflicting data that I'm referring to here is, so we have this nice drop down, and then we close below this gap fill and this trend line. This is a critical area. If we lose this, we're going down to 320 and probably the 200 moving average. What's conflicting is on the daily, we're starting to see an inside bar here. This is a bearish consolidation. You can see the fade and then the sharp gap down, and now the consolidation. That's a bearish pattern. What's conflicting with that to me is that seasonally, really election week and just November in general, the beginning of November in general is very bullish. The first week of November, we have great returns on the market on average. If we flip over here to the S&P 500 seasonal average over the last 20 years, you can see obviously October, it's no secret, October is usually the worst month of the year. But November, especially in the very beginning, is very, very bullish. And specifically in election years. The end of October we have a sharp decline, and then we rally into the election, and then we have a little bit of chop here in November. You can see on the average year we have a little bit of chop in November, and then ultimately we move higher. So what I'm seeing is right now we're seeing a little bit of a bearish pattern. I have been expecting a move higher, but this pattern does suggest that this is like bearish consolidation. Now, I mean, the election is this week. We have Fed news this week. We have economic data this week. So, I mean, this could change. I mean, we could easily, let's say we have a clear winner on Tuesday night tomorrow. Who knows? We could gap up and just erase all this move down. Likewise, if there's a contest or something the market doesn't like, we could easily flush lower. Ultimately, I do think our max downside right now is this 200 moving average, 310 area. I am, however, still positioned long. But there really isn't that much. I mean, this is probably just a couple percentage points here, maybe 5%. So there's not much downside here to take advantage of on the short side. Um, and the companies that I am long right now, I feel pretty good about. So, uh, that's that as far as how that's going. I do think that over the next couple of weeks to months, we will see tech lag. Um, it really does need to be unwound. I've been talking about this for months. As we take a look at the cues here. I've been talking about it since the end of summer. Like all these, the Robin Hooders and the ridiculous call buying, the soft banks of the world. This stuff doesn't just unwind in 1 week. It takes time. It's a lot. There's a lot of money. This market was very overextended. These companies, and we're starting to see it. Fastly coming in. PayPal had a nice drop. Tech was lagging today. Um, some of these other companies, Zoom is coming in. Peloton, these overbought COVID plays are I mean, they're overbought, and you're starting to see them come in. So I could see tech lagging, even as even though I am bullish overall, short term especially. There are certain sectors that are going to lag, in my opinion. Now, just to quickly take a look at some of the sectors I like here, financials. Financials had a nice update today. Definitely outperformed the market by about 1%. So you see the VFH here up 2%. Market was up just over one, about 1.1 on the day. You can see it is coming into a little bit of resistance here. You have the triple necktie with these moving averages, but it's traded through this so many times that these are really kind of minor resistance levels right now. So I don't really hold a ton of weight here, but there is a little bit of resistance. But if this market does like the election results, or if it doesn't, I think this sector is in a stronger position right now. So if we do have a little bit more downside, I think these stocks will be safe, and then once we do catch the bid, these ones will outperform. Or if we do rally up and we have a nice election result, then these ones are going to outperform as well. Short-term upside, you see right up in here, this little double top area. If it breaks through that, it's going to want to go to this double top. I am long Morgan Stanley. Oops, not that. Yep, see Morgan Stanley here. I got in last week, nicely in the money here. Again, same kind of deal. A little bit of this necktie here, but again, it's a minor resistance. We've traded through it so much that I don't expect this to be too much resistance here. So nicely in the money on some Morgan Stanley calls, and looking for some more upside here. First target would be the top side trend line, and second target would be up in the this double top area. Also IWM. This is another thing that's bullish about the market. Like IWM up today. And outperforming again, 1.78%. Market only up 1.1. Again, it's it's going to have some resistance at this gap fill here, but it's still outperforming, and it's actually been outperforming the market. So when the Russell is up like this, that's a sign saying that money is in the risk on area. So that's kind of trying to tell you something. Also, another area here, like look at gold being up today. Anytime gold's up, it's telling you that people are expecting inflation. And I still do have my long-term target. Actually, let's take a look at the futures here. My long-term target here of about 1800. I've got the alert there for 1830, just so I can get in there. But I see this I see this nice falling wedge pattern here, and I do think we get down in this area. If we trade a little bit lower, I'm going to be pulling the trigger on some longs, like heavy long. So we're waiting for that area, and I think and I've been talking about it for months. This is an area where I would consider a long-term position. I mean, I'll swing trade. I'm going to swing trade gold, but this is also, if you're looking to add to a legacy position, a long-term buy and hold, you want to get it right in here. 1800 is now, in my opinion, the forever floor, barring some crazy catastrophe. So that's what I'm seeing on gold. Real quick, we got to talk about the pot stocks. So let's just slide over to Aurora. Aurora Cannabis up almost 17% today. It was up almost 20% at one point. Man, I was expecting this to happen a few weeks ago, but you know what? I'll take it. It's been worth the wait. It's been a tumultuous trade, but it looks like what's happening now is we're seeing short covering going into the elections. This is a heavily shorted sector. Aurora has about 30% short interest. I think Tilray's got 20%. Afria is 25% short interest. So when these stocks, and I've been talking about it, when these stocks experience a squeeze, it's going to run. That's why you see it up 15% like it's nothing. And I think we're going to see more upside tomorrow. It's going to take a day or two for this to really unwind. Now the thing that's concerning is that yes, we've had this nice move on the 22nd before earnings, and of course they smashed it down. We had a nice move here, and then we gapped up and they smashed it back down. We had a nice move here, and it kind of rolled over. Yes, it's a possibility that it could maybe gap up and then fade tomorrow, which would be unfortunate. I did just read Zero Hedge posted that the election odds of a blue wave or a Democratic sweep just dropped by about 50%. So that's going to hurt the chances of these stocks. But the fact remains that even if there's only a 1% chance of a Democratic sweep, and you've been shorting it this whole time here, why risk getting your face ripped off? Because if there is even a 1% chance of a blue wave, these stocks will easily 50 to 100% upsize. I mean, Aurora will be a $10 stock in no time. So why risk getting your face ripped off? You could always reshort the bounce. So I do think that there's actually reason for there to be follow through for once on these companies. I am looking for, so I'm going through some possible scenarios. I'd love to see a gap up above $5. If we can gap above $5, then I think that we'll see a move up to 550. Let's take a look here. Yeah, so if we can just gap right above this and just not have to worry about that resistance, the short squeeze will probably take it up to 570, possibly even to $6. That's the best case scenario. That's what that's what I would love to see happen. If not, I still think we see some upside tomorrow to at least 520. If we're kind of flattish to positive tomorrow morning, we could still easily squeeze right up to 520, and that'd be more than enough space for me to bank a nice profit on my calls. Obviously, I'd like to see it get up to 6. That'd be great. But this trade's been so tumultuous, I'm not going to roll the dice on this one. So maybe I could see myself, taking 80 or 90% of my position off the table and then letting it run into the election, just as a crapshoot. But lock in some gains and then just let the last 10% ride. But ultimately, I do not want to play with this, because if there's a red wave, for instance, they will short this. They will short the shit out of it. It's just going to be just like right here, 571, and blam, all the way down to 375. So the window of the exit is kind of small here. So we don't want to play with fire on these things. Tilray was up nicely too. Had a really nice day. I'm in this one also. Currently up about like 80% of my calls. With Aurora, I'm at about break even. So we're very close to in the money. It's not going to take much. I do think these things pop tomorrow. This is right underneath resistance. Same thing with CGC. I'm not in this one, but CGC broke out. Look at, here you go. There's a trend line going back. Actually, it's a pretty long trend line. It goes back about 2 years. Yeah, there you go. All the way back to the middle of 2019. Nice breakout and a little bit of a back test here, and then a nice punch right there. So, the sector's finally moving. I was thinking that it was going to be more like hedge funds buying into it and just, preparing for, getting a decent position in these companies, preparing for a potential blue sweep, but it's really just short covering. Either way, the stocks are moving. And who knows, if they gap up tomorrow, there could be, like the dumb money chasers coming in, and they could push it higher for us. So we'll see what happens. But again, it's a very small window, so I'm not gonna try and get greedy with this. I did hold Aurora into earnings last time. Decided to roll the dice. Definitely not gonna roll the dice this time. Just want to shift gears really quick. I want to talk about oil as we bring up crude here. As you know, I was in USO puts, and I did get out last week. I got out on this little flush down here. Really wanted to hold it longer. In retrospect, I probably would have sold like 3/4 of my position and let the rest of it run. But I really didn't want to risk this bouncing back up again and having to deal with that. Again, this has also been a bit of a tumultuous trade. I shorted the bear flag here originally with a small position, added to it up here, added again up here, and then, I got out of it, made a nice little gain. Not as much as I would have liked to. I did want to see it flush down a little bit more, but I'm actually happy with it because I was able to use some of the money to roll into Aurora when it broke through $4. So that was a nice little way for me to average down that position. And I do think that we are coming into a short-term bottom here. As I'll pull up my Twitter here. Talked about this actually just about 24 hours ago. You see the little measured move here, $7 from the top to the bottom here in August, September, and then the most recent pivot high, another $7. And oil was crashing last night. Oil crashed down, flushed all the way down to like 33 bucks, and everybody's talking, oh, oil is crashing, oil is, all this stuff. And I said, you know what, I think it's actually going to find a bottom here. Lo and behold, oil ripped up today and reversed. So yeah, I do think that we're going to see another chop here. Ultimately, oil is going lower. We're targeting right around here, $25, $28 in that range. But I ultimately think it's probably going to need to chop around a little bit more and consolidate. But ultimately, I do think it's going lower. So just wanted to touch base on that. Couple of stocks I want to just pull up, potential swing trades. I really love this setup here on Sony. Now I did talk about this a few weeks ago. I had a buy level right here. You can see the trend line here at about 72, and I had I had a plan to potentially open like half a position here, and then another half a position if it got down to 70. It got very close to my buy level, and then it has ripped higher. Now, ironically, I actually love this as a short right now. You have a nice time count here. You're into double top, and you haven't confirmed above the double top, and it is short-term overbought. But more importantly, we have got a big time frame here. Big trend line going all the way back to 2015. Look at this one, bink, all these hits right here. This is way overextended short term. Depending on where this opens tomorrow, I'm definitely looking to enter it as a short here. I really like this setup. Now this is a swing short, so I'd probably just be holding it for maybe a retrace to about 80 bucks. But that'd be a nice little gain there on that. Another short that I like here is HSBC. This is kind of a low-hanging fruit stock. It's just a junk company, tons of toxic assets, horribly underperforming. But I do like it. If it gets back up here to $23, I'd probably take it for a swing short. Reason why this level is so important here is it's literally a trend line going back to the QE 2009 March lows. I mean, so you broke through that earlier this year, and I would assume a retest of this is going to be like pretty heavy resistance. This thing is very weak. It's a junker. It's a low-hanging fruit. And even if the market rallies and is rallying higher, and somehow this does get above this trend line, it's probably not going to go that much higher. It's got another pivot right here. It's got the 200 moving average. So this thing is in a weak position. That's why I like it as a short, because if it does rally with the market, it's going to underperform, and if the market does sell off, it's going to outperform to the downside. And then really quick, one long trade I do like is Twitter. This one I'm looking at here. Obviously the big flush on earnings, crazy run up, gapped up above this channel and then got flushed out. Probably a little oversold short term. There is decent support here at $40, $41. But the reason why you don't buy it here is because I always go by a saying velocity matters. And what I mean by velocity is look at this. I mean, gap down and then a flush and then another flush. So this thing's not really safe at $40 because of the volume and the speed in which it comes down. I like this area right here, about 36.80, 36.75. You have the 200 moving average right beneath it. And if you go back to, actually I think this is longer than that. Yeah, so you have these pivots here. Look at this. Pivot from 2018, pivot 2019, another pivot here. I mean, so this is a really strong area of support for Twitter. And that's where I'd be looking to enter it for a long trade. All right. So that's about all I got for today. We'll keep an eye on the pot stocks, and we'll see what happens tomorrow. It's going to be a crazy day and a crazy week. All right, you guys take care. Have a great rest of your day. Have a great rest of your week trading.